The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman here, Tiger Technicians Hour, 877-927-6648, August the 15th, Wednesday. It's also the day that I do my webinar, my Tiger Dollars webinar, as part of this whole series that's been going on, fabulous series, and I hope to add to it tonight, 6:30 till 8 Eastern Time, for those of you who have your Tiger Dollars and you had signed up for the various webinars. This is going to be core ChapmanWave studies, how I go about assessing and evaluating the different chart patterns, where you can go from a buy signal to a buy mode, etc. It's just very detailed, and there'll be a question and answer section as well. Actually, I like to take questions as they come up because that's the way I do things. I like to get the answer right away because I will never remember what the question was by the time it comes to the question period. So let's go straight to the market, and thank you, Steve and Tom, again for a fabulous lead into this show. You know, we have programming here just 9 o'clock right through until 6 p.m. where Tom wraps it up before to 6 with his Tom O'Brien show, and just a slew of listening, just great shows. So I'm going to go through the market as I see it right now. The Dow is at 13,171. In the ChapmanWave methodology, from the last low bar of consequence that I have called a buy signal turnaround at 12,492 on the 12th of July, what we expect out of the ChapmanWave is, at least, if it's going to succeed, is at least to go to a buy mode, implying that it will go to at least a peak D. When it gets to a peak D, many other things can happen. It can go on to an E, F, and G. It could recycle. It could give an instant restart that not only takes you to another A, peak A. This is a forward-looking technical indicator. And not only does it give you, for higher peaks, you can even, very often, the second buy mode after instant restart can go to 6. So that's 10 higher peaks altogether before you can get a significant pullback. Or the technicals start to fail at peak D or E, and then they come down and the price comes down sharply. Well, it turns out we had peak A at on the 13th at 12,784, had peak B at 12,977 on the 19th of July. Then on the 30th of July, 13,128 was F/C, because it was a parallel wave count, confirmed the peak D on the 7th of August at 13,215.97, gone basically sideways for this. This is a high-level consolidation thus far. And what we have, we went to a slightly higher high at 13,223 on the 14th. Now, this is the moment where I always say, you just have to be careful. You don't, if the technicals are still strong, you don't have to go into short positions. You don't have to do anything other than to be somewhat careful, because the next price movement is going to, the ChapmanWave is the waveform that never sleeps. In other words, every higher high bar and every lower low bar are assessed and counted. Because of it, every single chart and every single time frame is being assessed and evaluated, gauged for strength or weakness. And then you can add, and I'll show that tonight in my webinar, that you can add the technicals. You can have just the naked chart. You don't have to have 9-period exponential moving average. You don't have to have anything. If you understand your chart patterns and the ChapmanWave, you can use just the plain old, what I call the naked chart, just a bare chart. You don't even have to have candlesticks. You can have bars, because all we do in the ChapmanWave is assess higher highs and higher lows. The candles, I'll talk about that as well tonight, imply other things. So it's another technique. It isn't the technique, because the D technique only takes you to higher highs and higher lows. Everything else, it's cumulative. Now, well, let's just go through the numbers real quickly. We've got the Dow in a trading range, and the 120-minute chart made a C1, C2 peaks, and it hasn't made a peak D yet. Oops, it has made a peak D. Always expect that. There you are. Peak D was made right there at that 13,200. It actually is 222 on the 120-minute chart. I never understand that. And 223 on the day. I suspect that it was just as the turn was coming in the time, 120 minutes, and therefore it went to 13,222.93 and just missed that tick that, I don't know, I'm just guessing. So once again, peak D in the 120-minute chart says, be a little careful, because at other peak Ds, you've had a bit of a pullback, and you have the technicals start to fail. Now, this is really interesting, because when the technicals are starting to weaken and the price holds up, it means that the next rally in the technicals, if it occurs, still with that high-level consolidation, must take the price higher. Otherwise, when the technicals fail again, it'll drag that price lower. So I have parameters really clear. A close between, just as a very near term, I'm not talking about big stuff. On a very short-term basis, a close between 13th, what did I say today? A close below 30,120 on the 120-minute bar. Now, let's make it easier. If at 3 o'clock this afternoon, to the close, the Dow is down below 13,120. Let's call it 13,120 to 13,100. That'll say, be careful, because now what's kicked in is a digestive period, and we'll watch bonds to see if bonds are going to rally. If bonds don't rally, we're going to get to that as well. My three bears, VIXI, Dolly, and Bondi, that's the volatility index, bonds, and the dollar. If they refuse to rally here, we can see this rotation into selective, well-positioned stocks, pushing them higher, and the weak stocks continue to remain weak. It's just a phenomenon that when the tide has changed, especially in monthly charts, you can only get a little backwash. It's not going to change the direction, the projections of the hat-trick top for the very weak stocks. So here we go. And on the upside, what's needed is a decisive break to the upside. And I would have to say that it won't be good enough just to go into the 13,200s. I want to see a close decisively above 13,250, trying to test the 13,290s in the next day or so, because that'll be very positive. Meanwhile, there's a leg C up, but it's underneath the previous high of 13,338 in the weekly, but the weekly chart is improving all the time, and so is the monthly chart. I had a question in the den, Basil, what is the symbol for bonds? Well, if you've got TradeStation, you can either go at US.P, and that takes you to bonds, and you'll see that we've got a peak D in the monthly, in the weekly. You've got a leg E/C in the monthly, and it is just as we're speaking, the continuous contracts at 146 and 20-30 seconds, 144 and 4. Let's call it 144 is the 9-period exponential moving average support in the monthly chart. From the pattern I'm looking at, I think bonds are going to pull back further. I've not got this as a major sell signal yet, although I must say that TBT has acted so well, that's 200% along the Lehman 20-year T-bond fund. Now let's just go to the TLT, because all of this is part of what I want to do, and then we're going to take calls at 877-927-6648. This is leg D down in the TLT. The TLT has also made a peak D, and I'm going to have to wait till Friday before I can put a down arrow instead of the plus sign on the D at 132.21. What's really important was a peak E in the daily. No matter how I count it, I still get this only as leg C. Can that fail? Could it have recycled up and maybe this is E and F? Yes in the monthly charts, but I still believe firmly that I do not have the signal for a major top in bonds. That's number one. And number two is, I wanted to talk about this. Well, I have time. Number two is my predilection to my premise going on 10, 11 years, it was back in 2000, so it must have even been before 2000, that eventually the United States Fed will want to Japanize our bond yields Just as Japan went to 0%, I suspected patterns follow, one after the other. They always do. That's why we can't not anticipate that at some point we might have the same kind of Greek crisis or whatever it is in Europe. Patterns follow. But in the meantime, I suspect that we are going to look at the yield in bonds still remaining very low, and that bonds will break to a leg E in maybe September, leg D in maybe September. That's my premise at this particular point. Now, let's go to the reality, and the reality is, thank you, I just had a message saying Japan 10-year yielding 0.75 recently. So how about that, huh? So bonds are saying, pulling back, gone underneath the left side low in the 124s. Today went to 122.49. Everything about it says that bonds are pulling back, that the volatility index, the VIX, let's just check it out. I haven't had a chance. I've been working on my, what you go for tonight. The VIX is at 14.58. It is underneath, the low was 13.67 just 3 days ago. It is in a very low range. Yes, it could bounce, but at this particular point, historically, the VIX is saying, wow. Historically, on a monthly basis, the VIX is saying it is in the area that says there could be a turnaround at some point, but you have to wait for it to show up on a monthly basis. I have to wait till the end of August to see whether the volatility index is going to close above 19.23. I give it a little bit more. Let's call it above 1950 to 20 on the last day of August. Or is it going to hang around here between the 16 to the 14 or even 13s for the next couple of weeks as bonds digest? I don't know if bonds have to go much more in time, but they've done a lot in price, and maybe not too much more. Maybe it's more time than price. I don't know yet. Now, the other is the dollar, DXY, and then we're going to go to our first caller because that fits right in with what I'm looking at. The dollar is up 24 cents at 82.73. This is the dollar index. Made a peak D top at 84.10. You remember, we're going to go through this tonight. How important peak Ds can be. Yes, you can go to an E, but those Ds are the warning signs to say, just be a little bit careful unless you're recycling to the upside. And peak D was made in the dollar at 84.10 on the 24th of July. And here we are down testing the 82.04 level on the 7th and bounced a little bit in a trading range right here. Going to watch it real closely because the stochastic is rallying, MACD's rallying. Of all things, I don't think there were too many people expecting that at 11:20 Eastern Time on Wednesday, the 15th of August, after everything that's gone on, that the Dow would be unch and the S&P would be up 1.55 instead of the Dow being minus 60 and the S&P being minus 7 and bonds trying to rally. This is very interesting. We'll be back with our first caller, Peter in Park City. Peter, hi, you wanted to look at the euro, correct?
Yeah, absolutely.
Great.
Yeah,
then we're going to be back with the euro straight after these messages. Basil Chapman, 877-927-6648. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Just in the den, there was a question as to the symbol for bonds. Also, it's the USU12. So that's the one that I'd be looking at. All right, we've got Peter on the line from Park City, and I'm going to say, Peter, what's your position in the euro at this particular point?
Well, actually, I'm starting to see bigger and bigger weakness. I actually was hoping for the 124.91 peak D failure to set up the shorts, but right now it doesn't look. It looks like it's starting to weaken. And if you pull up the daily, we're sitting right on the trend line of the reverse of your falling axe.
Correct. Okay. So good point. Now let me just show folks what we're talking about here. I'll draw it in. That's that line right there. And in fact, it's not really been able to pierce that line decisively. It's gone up and bumped it. So now this is what we're looking at, folks. We're looking at the EUR-USD. This is the currency pairs. I do not trade these. I just use them as actually, I use them a lot as practice sessions because they go on all day and all night. So I like whatever currencies. I just use them to practice the ChapmanWave because, it's like a sport. The more you practice, the better you get at it. You can recognize beforehand what might be occurring. But this is very important. If the euro is starting to pull back, you will know a great deal more if you look at the relationship of what the dollar's been doing, because the dollar has gone to a trough C from the 84.10, a high, but it hasn't really been able to find the power to break decisively above the 82, 87. Now, I happen to be of the opinion right at this moment that there is more likely on a very short-term basis to be weakness in the general market. It's really how will stocks, individual stocks act. But then I go into the other part and I say, why would bonds still be down if it's part of that triumvirate that I'm looking at? And why is the volatility index, it's up a little bit what it was, now it's down 21 cents. Why is the volatility index not participating? So to me, I'm looking at this and I'm saying the euro has to be, or it doesn't have to be, it should be a part of it. And if the Dow and if the market is going to rally, I suspect that you'll see some strength in the euro. Now, some strength is not strength to turn the weekly chart, which still looks terrible because it's gone right through the left side, right side price time match. Actually, it's gone through, I'm going to squeeze this chart so folks can see. It's gone through a major from the October 2008 low of 1.23. It rallied all the way up to a peak F back in November of 09, came back, undercut that and went to 1.187 in June of 2010. Had another rally back to peak D, but underneath the previous high back in November of 09, and now it's undercut the left side low of October of 08, but not the 1.875 low of June of 2010. So there's a beautiful left side, right side price time match, which extended a little bit, and very often when it extends, but the trend remains down, what happens is you take out all the previous left side lows. That says there's a good chance that the euro at some point, and I'm looking about a weekly chart, it doesn't tell me when, will take out 1.187. Now we have to look at it and say, but wait a minute, the slow stochastic has made a W formation in the weekly chart, gave a really good signal for a bounce. It's now from underneath from about 9%. Let me just double check. From 9% back in July, back in mid-July, it's up at 22 or 23%, and yet the price hasn't been able to break above the previous high that was made back in the week of the 22nd of June at 1.274. So that's exactly what you're saying, that you're looking at this, and instead of doing what it normally would do with the technicals moving up, it's at a pathetic move.
Yeah,
so that, all right. So now it says to us, oh, okay, but wait a minute, the dollar is also not participated, and this is what I've spent a lot of time on, and I'm talking about the rotational aspect together with the selectivity of this particular market at this particular junction. And what I showed my subscribers this morning in my opening call, I showed them the real estate, the retail index, and the retail index, I'm going to actually put it up here because this is part of the whole puzzle that we're looking at, folks. And there's a break coming up. I do want to spend a moment on this because we are trying to put together all the pieces this is the most complex the puzzle's been since we were making lows back in March of 2009. This is tops don't come all together. Bottoms very often do. So let's put this together, and we're going to try to figure out what's going on. I'll be right back with Peter in Park City.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman here, and we're on with Peter and Parkside. We're looking at the euro, deciding exactly what pattern it could take under various conditions. And I just wanted to go through this one more time. The RTH, which is the retail vectors ETF, I've got this. I wrote it in right now. I had written it in small, but I wrote it right, nice and big here so you can see it on Tiger TV. It says, what recession? You've gone from 20.02 in 2008, November, all the way to a new recovery high this month at 43.75. This is discretionary income. You don't normally get that kind of pattern if there's a traditional recession. Now that takes me to the EUR-USD. And I think, and I've spoken about this a little bit before, that I believe that we're in trading ranges in the dollar. I think we're setting up a trading range in the bonds. I think we're in trading range in the euro itself, the EUR-USD. And you aren't going to break out until there's a significant move. If you look at the euro monthly chart, now I had all these notated. I don't know what the heck happened here, or how I lost them. I mean, how many dozens of times I've done every single time frame over and over. But if you look at the euro USD, you will see, Peter, that the weight of evidence says that the MACD is still very wide. The difference between the yellow line, the fast-moving average, and the red line is big. And there is a flattening out at 10% of the slow stochastic, but that can turn out to just flatten out, or it could quickly bounce above 20%, which would be positive. So what happens in August is going to be really important. Now, we've got a ChapmanWave Roman candle from last month, and that says that if at any point it breaks the euro starts to go below 1.21. It actually went down to 1.213. But if it breaks under 1.21, not only will you probably retest 1.204, the low of last month, but you'll probably break that, and you could come down much sharper, and that's when you're going to break and test the 1.875. That makes it really imperative that some trigger somewhere in the next, I would have to say in the next 7 to 9 sessions, takes the euro over, first of all, 1.241. That way it's getting closer to the previous high of 1.24413, that area, I think it was 2.5, right, on the 6th. And as soon as it does that, as soon as it can make that trend line support, all of a sudden it'll be tackling the doji candle of the 8th and the 7th, those two candles, and it'll go to leg D. But if before that the euro closes under 1.22, if it closes under 1.22, that bar of the 3rd of August is pretty much going to be tested, and then the next candle below it of 1.21. That's the only way I can look at it. In the meantime, all I can say to you is a narrow range on a 120-minute chart, that rectangle formation, just like the E-minis, that sideways rectangular pattern can last a lot longer than your patience. So on a very short-term basis, if you're asking me what to do, I would have to say, I think from the look of it, it could test 1.2240. That was the low of at 11 o'clock on the 10th. But either way, it looks to me like it's pretty much in the trading range, and that only really short-term trades are going to work. I don't think it's a big trade at this particular point. That's the point I wanted to make, that I think that the dollar, the euro, and even bonds, even though they pull back sharply, have been setting up trading ranges. It's individual stocks like a Google and Apple, certain others that in the market are actually doing very well, and there are many others actually, and the poor ones are doing poorly. So the trend is that the money is not flowing into the currencies as I see it right now. It could happen this afternoon, but it hasn't yet flown significantly. So I hope that answers your question as to where it's going.
Basil, if you drew a trend line from the 120.4 up along that and then do the tops, isn't that a reverse falling axis could potentially be setting up?
Oh, there are three patterns. One is that there is a pattern that's setting up now that says if it breaks underneath, as I said before, if it gets to the 122 area, then you've got the cup formation, the arch formation, and you have to be very careful. But the MACD hasn't turned down yet. It's flattening, but the MACD fast-moving average hasn't crossed negatively. Stochastic is at 64%. So you've got a divergence between price acting pretty well and one of the technicals not. I'm going with the MACD, and it says so far there's enough support to keep it in this fairly tight trading range. But that weekly chart says, be careful, that 9-period moving average at 1.2376 has not been broken on a closing basis to the upside. That's the key. You spike on a Friday close into the 1.24, 1.25 area. Suddenly you're going to see the monthly improve enough for it to bounce all the way to the 1.28s.
Beautiful.
Hope that helps
Thanks
you.
so much, Basil.
Thank you so much for calling. Always enjoy talking with you. Let's go to Ken in Fort Madison. Hi, Ken. How are you?
I'm very good, Bill. No, thank you.
Good.
I'd like to have you look at Deere & Company. I don't own it, but it looks like it took a little hit this morning.
This is one of those, oh, dear.
Yes.
Yeah. So Deere, folks, is trading at 74.05. It's down 6.08. Here's another thing that's really intriguing. On the 5th of July, it went to 82.46, came down to 72.85 on the 25th of July, went to peak ABC. But I haven't really printed it as a gray. Usually I call it a gray ABC because it is still significantly underneath the previous high of peak D back on the 5th of July. And that's where you got to be a little careful. But when news comes out, news can abort a rally pretty quickly, and that's exactly what it's done. However, if you look at the weekly chart says, hey, at this particular point, I'm okay. If I break under 70.28, this is Deere talking, if Deere breaks under 70.28, it'll test the 69.51 low of the week of June the 8th. And if it does that this year, and if it does that, you've got yourself not only a falling axe pattern in the weekly, but suddenly it suggests that that's a right shoulder failure pattern from the all-time high of 99.80 made in April of last year. Remember, that's when China was still supposedly buying all the copper and everything, and that's where you've got Caterpillar and Deere and the agricultural stocks and anything related to do with agriculture moving higher. Now, what's very important is that the monthly chart of the MACD is very negative. So let me ask you, what do you own? You don't own it, right?
No, I don't own it.
So and your thinking is maybe you want to buy it for a pullback or you want to short it?
I want to buy it.
Yeah, I'm going to say to you at this particular point, I don't see it as a buy. I don't see it as a buy other than a reflex action that says I'm a little oversold. At some point, I might want to fill the gap, but that's guessing. So what I'm going to say to you is this. Let's hold off. It's on my list as well, and I'll tell you why. Deere, Caterpillar, a number of these stocks, they are very important in the makeup of my Dow quartet, because sometimes I include these stocks, DuPont, Caterpillar, or Deere, as guest artists. But I haven't had them there at all. I've just stuck to the four, GE, IBM, MMM, and UTX is the pilot light of that little mini index that I made up. I'm going to say to you, don't do anything. But on a bounce, a good 15 to 18% bounce, I'd be watching to see how Deere holds 72.85, the low of the 25th. If in the next 3 days it gets there and it starts to show signs that it could have a pretty decent bounce, then I will mention it on the show, and then you can call me and I'll say, Deere looks like it could be ready for a bounce, and that bounce could be sharp. But the weight of the evidence says that it's probably made a significant top at 99.80, that this is a reflex rally that it's had from the low of 59.92 back in October of 2011. It's got this pattern I call the right shoulder failure pattern. Maybe I'll have a chance tonight to talk about it in my webinar. But most importantly, to repair the damage, and I'm not sure how it's going to be able to do that, it's going to have to break and really spike into the 82s, and it has to do that in August, because if it takes out 70, 72, 85, if it breaks and closes under that, I just don't see how it's going to do that. So it would only be a counter-trend rally, and I'm just going to say to you, keep it on your radar, but have the patience to let it play out, because if it starts to fill the gap, I'm going to have to say to you, well, it's already starting to fill the gap. We might have missed the trade. I don't think so. And if I look at my 120-minute chart, which made a peak D, a beautiful peak D. Oh, those 120-minute charts, those peak Ds, went to a peak D on the 5th of July at 3:30 in the afternoon, and it's not looked back since. And that here again, it went to peak A, B, C, D. It went to a rogue wave E on the 1st of August at 80.79, pulled back. Try to fill it with an A, B, C, D, E, even an F. This is a rectangle. Oh, this is like a study piece. I could do a whole session today on this particular pattern. We talk about it so often. That's the flagpole pattern, the 120-minute chart. Broke under it. No, I think it's got a problem. I'm not going to say to you, I'm going to say, hold off. It'll only be a counter-trend play. And I probably would say to you, when stocks have a history, this is starting to give, of powering down sharply or gapping down, that means that the tide has changed, and the surprises will be to the downside. So even if you've got a nice little percentage gain, overnight something could happen. I'm going to say stay away from it for now. We'll look at it again maybe in next week. Okay?
All right. You have time to look at TBT?
Oh, TBT, it's a good one. Let me see. Oh, I've got people waiting. I'm going to say TBT's in leg C up. It's very strong. Man, that says that the dollar, that the TLT, this is the Lehman 20-year Treasury ultra short fund. It's 200% short the TLT. It's in leg C. I think it's still going higher to leg D. And the bar that I'm looking at is 16.64 is the high of the week of the 1st of June. And that's going to be the test for it there. So far, the technicals are very strong on the TBT. It looks good. TLT looks weak. Hope that helps you.
Thank you very much, Basil.
Thank you very much. Let's go to Lou in Nashua. Hi, Lou. How are you?
Fine, Basil. How are you?
Finally, we got you. Not one minute to go, but right there with plenty of time. You wanted to look at?
IWM, possibly.
Great.
Where's that?
Okay, IWM is the Russell 2000 ETF. It is the iShares. It's trading at 79.96, up 36. See, this is what I'm... Do you have a position, Lou?
I'm short.
Okay. If you are short, I'm going to just make... You don't have to just jump in and do that right this very second, but I'm going to just explain to you what I'm looking at and why I personally would not be short unless certain things happen. And so far, the opposite has happened. So, let me explain to you what I'm looking at. Folks, I'm going to, if you're looking at Tiger TV, I'm going to just stretch this out. This is the daily chart. Is it messy? I'm going to open it up. So I don't want to get rid of these lines, but I want it to be clear. There it is. It went to 81.84. Now, how many times just today have I mentioned peak Ds as being very serious tops? It could happen, and this is one. It went from a low back on the 4th of June at 72.94, went to peak A, B, C, and then it soared up to, with a doji candle on the 5th of July, 81.84. Then it came back down. There's that right arm, that right shoulder failure pattern that I was just talking about in the whatever chart it was that I was looking at a little earlier on. What was I looking at? Let me just double check here. In DEER. DE was the symbol. The monthly chart had that right shoulder failure. So IWM, the iShares Russell 2000 Index Trust, goes to 81.84 on the 5th of July. It pulls back to the 200-period exponential moving average on the 12th at 77.59, bounces to peak A, pulls back, bounces up to peak B at 80.74 on the 19th, and then it not only gives it back, but it makes the pattern that I call the dreaded H, and that very often goes together with the pattern that I call the right shoulder failure. Why? Because it looks like if you had a head and shoulders, this would be the right shoulder and would be failing. And what does it do? It goes to 76.27, has a rally, it gets to 79.91. So now it's making lower highs and lower lows. But now look what happens. It rallies to that 79.91, and then it comes back to where? 76.25. It makes a slightly lower low, but it closes above it. The rule in the ChapmanWave says, if in the dreaded H formation, that's that pattern from 76.27 to the bounce to the recent low of 76.25, if it goes underneath but closes above, it should rally and only go to the previous arch high. If it goes above that, watch the technicals, because if the technicals are strong, it could still go higher, number one. Number two, if it goes below and closes below, it certainly won't bounce even up to the previous arch unless you're getting a buy signal, a brand new buy signal in the technicals. Well, have a look at the divergence. The divergence on the 76.27 low on the 24th of July had the MACD and stochastic pulling back. When it went to the fractional new low at 76.25 on the 2nd of August, the stochastic was already rallying. The MACD was making a W formation, which is now cross positive, and the stochastic's at 83%. So there's no rush to do anything. I want you to hold on. I want to go through this in a little bit more detail because it's been the lagging indicator. It's been the weakest index, and I would like to go through it to explain what I'm looking at, and maybe it'll help you a little bit. So hold on. We'll be right back with Lou in Nashua.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Yep, trade what you see. I love that. Larry Pesavento will be coming on next. The program's all the way through the afternoon. Just great shows. Dave White, Ken Shreve. Who am I missing? I'm missing Daryl. Oh, they're just great shows. Now, let's go through this. We've got Lou in Nashua. Lou is at this point short the IWM, but I'm looking at something. When I looked at the high of the week of the 8th of July, I sent out a chart to my subscribers, and I had actually, it was in white background because I want them to print it out. I want you to show that at that particular point, there were some similarities with the deflection lower of the MACD, the yellow line below the red line, and the stochastic rallying, but not above 80%. But that took 1, 2, 3. On the 4th week after that, on the week of the 29th, everything collapsed. The stochastic pulled back, the MACD turned down. We've got the exact opposite here. I've even written in, does this match last July's top? Well, it was, but not anymore. All of a sudden, you've got 3 candles that are moving away from the arch formation. Above it, you've got the MACD flattening out, which means that it takes the last signal It maintains the last signal, and that was the previous. It's a very short-term signal, and that's the high, the low of the 8th of June at 72.94, and the MACD, the stochastic, was about to pull down back, but now the fast-moving average is moving higher. It's at 65%, still under 80, but the price has moved together with the indexes. So all I'm saying to you, I don't want you to suddenly change your position or anything. Think it through. I would do this. I would say that I don't know how heavily you are in it. If it's part of your portfolio, it's one small position, I'm going to say fine. But if IWM closes towards the high of the day, but especially if it's at 80 right now, if it takes out 80.42, I would not want to be short, even if the very next day you get a signal. Why? Because at that point, the MACD and stochastic in the daily, which is at 83%, that's strong. That's going to say, I want to tackle that previous high of 80.57 and make a new leg B. That's the way I'm looking at it. You want to see it fail by the end of the day. You want to see the IDM closer to the 9-period exponential moving average of 79.54, and you want a lousy opening tomorrow and a down thrust that takes it into the wick of the candle of the 13th, and that would take it into the back into the 78s. That's really what you want to see. So my advice is on the short term is to say, I would personally have a stop. I don't know where you got in, but I would have a stop. It depends where you got in. But if it starts to close towards the high of the day, I would take a little bit off, at least a cautionary note. But definitely, if by tomorrow at 11:30 to 12:30 in the morning, it's at, that is 12:30 in the afternoon, it's above 80.42, I'd be done. I'd say, wrong way, it's going the upside. And the reason why I say that is that the 120-minute chart has got a cup formation. If it breaks above 80.57 and it holds there, that might be either leg B or C in the 120-minute chart, and that could definitely start to tackle the 80.74 high of the 19th. So those are my parameters, and I hope it helps you.
Yes, it does.
Thank you very much for calling. I'm pleased we got some time in rather than saying, Lou, I missed you. Thanks for calling, Lou.
Thank you.
Thank you. Now, folks, I was talking about narrow ranges. I think the GLD is exactly the same thing. I think the GLD, the gold trust spider, is just in a trading range. Look at the weekly chart. I've been talking about this for weeks. Now, on a short-term basis, I know many of you have been able to get in and trade it. I'm looking at this and I'm saying my monthly chart still says GLD should weaken, but in the meantime, it's just stuck. It's stuck between like 148 and maybe 161 or so. Thanks for being here, folks. My service is the opening call. Go to the front page. Check it out for 2 weeks. I'm sure you'll love the information there. And not only that, tonight at 6:30, for those of you who have Tiger Dollars, I'm doing my webinar. I'll be back on Friday.